Hello and welcome to the session in which we will discuss financial reporting. Specifically, we will start by looking what is the objective, what's the goal of financial reporting. So what is financial reporting? What is that term? Well, the main idea is to report useful financial information that's financial in nature to people outside the company. Now, the technical term for people outside the company, external users that are outside the company. Outside the company means not management, not people who runs the company. The targeted audience are external users. Now, why? This helps them make a better decision. We're trying to give them information so they can make a better decision about the company, whether to invest the company, not invest, lend the money. If they lend, what interest rate do they want to charge, so on and so forth. So who are these people? I kind of touched upon them. The main target are investors and creditors. Now, why? Why do we target investors and creditors when it comes to financial reporting? This is what we will dive into this session, explaining why. Because if you understand why these groups are targeted, then you will understand the nature of the reporting. Why do we report certain information in a certain way? Why? Because we are targeting investors and creditors. This process is called financial reporting, is when we report information to these two groups. Sometimes it's called financial accounting, and the real word is called reporting. This is what we will dive into this session. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
So why focus on investors and creditors? The reason is simple. They are the one risking their money. Well, if they are risking their money, we need to give them information. And if you invest either time, money, effort, emotion, if you invest in something, you're going to be interested. You're going to be vested in that something. For example, investors, they buy stocks. They buy ownership. They give the company money, and they would receive in return stocks, ownership. And when you receive those stocks, the reason you would invest is you would hope that your investment would increase in value. Therefore, you're interested in knowing how well the company is doing. So before you invest, you want to measure the risk. You want to know how risky that company is. Or you could be a creditor. So investors, they give money to the company. Creditors also give money to the company. And what do they expect in return? They expect that you pay them interest, and you expect that you pay them their money back. So banks, lenders, they want to make sure they want to be paid because they are taking a risk. Because these groups are taking a risk. Investors and creditors, they need a clear and reliable financial information to evaluate their decision. In what sense? Whether to invest in your money or lend you money, because they expect something in return. And in order for them to evaluate, to make a better decision, they want to know about your future cash flow. And how would they learn about this? How would they learn about the riskiness of your company? Through financial statements. So investors or creditors are keenly interested in the company's cash receipts, cash disbursement, as well as certainty how risky these cash flows are. So these insights enable them to measure the company's performance and ability. And that's why financial reporting target those two groups. It doesn't mean it does not target other groups, but those are the main groups. Or it doesn't mean those are the only external groups, not at all. But those are the main target of financial reporting. The government, suppliers, not employees, you could be the union. Many Anyone outside the company is interested in your information, but you don't tailor your report to service these companies. You tailor your report to give as much information to investors and creditors. So how helpful is this information? So when we provide this information, what it should convey? Well, it should convey three things. How much cash the company might generate. Whether you are an investor or a creditor, you want to know how much cash in the future the company will generate because you want to evaluate your investment. Two, when you will receive the cash, the timing of the cash. Timing is important because, time is money. So are you going to be receiving $1 million a year from today, 2 years from today, 5 years from today? And eventually we would learn about the time value of money. Well, not eventually, we would learn about the time value of money, and we have to discount the time value of money. And the third thing we need to know about the company is the certainty, how certain they can be about this cash flow. We need to take a look at, okay, we think we can get $1 million. Is this a 40% chance, 30% chance, 100% chance? How risky that? So the financial information that we provide should help investors evaluate how much cash, when, and the certainty of that cash. As I mentioned, there are other users like government agencies, employee, or customers are external users, but financial information provided to investors and creditors. Now, how do we communicate this information? How do we convey? Let's take a look at this multiple choice question from farhatlectures.com. Financial accounting assists users of accounting information to perform all the following except. So notice here we have 3 yes, 1 is a no, and we're looking for the thing that the financial information does not help with. A, buying, selling, and holding ordinary shares and bonds. Would financial accounting or financial information or financial reporting help you with that? Yes. One of the primary objective of financial reporting is help investors that buy shares in the company and creditors that buy or lend money through bonds make decisions. So yes, that's one of the objective. Making investment decision. Yes, that's the same thing as buying and selling stocks or bonds. That's out. Determining the creditworthiness of the company to decide whether to grant it a loan or not. Same thing. To make a decision whether you should buy their bonds, lend them money, determine their creditworthiness. Are they creditworthy? Creditworthy means can they be relied on? If I give them money, they will give me the money back or they will pay the interest. Yes, that's one of the thing that you would do with financial accounting or financial information. By process of elimination, D is the correct answer. Planning and controlling the company's daily operation. Would financial accounting do that? And the answer is no. There's another term, it's called not financial, called managerial accounting. And managerial accounting would help management plan and control the company's day-to-day operation, but not financial accounting. Financial accounting is for external users to make investment decision. Managerial accounting is tailored toward internal users for planning and managing and controlling the company. So the answer is D. What should you do now? You want to go to Farhat Lectures, look at additional MCQs, resources, exercises, true, false lectures, any resource that you can add to your arsenal, especially if you're taking intermediate accounting or studying for a professional certification, accounting certification. The best investment you can make is invest in yourself. Good luck, study hard, and of course, stay safe.